And now moving on to the next story, Media Owners Association of Kenya is among the 10 entities who have recently opposed the 2023 financial budget during the final day of public participation, which is being presided over by the National Assembly, Finance and the National Planning Committee. As Shedra Karera reports, the National Council of the Non-Governmental Organizations and Human Rights Groups are among those who rejected the housing levy.
You said you are supporting Mang.
As Financial Bill 2023 public participation comes to a conclusion, non-governmental organizations in conjunction with human rights organizations were among the 10 groups who have recently rejected the bill.
We commend the government for its commitment to buy.
The groups that appeared before the National Assembly Finance Committee also punched holes into the government proposal to have 3% levy deducted from employees' salaries to cater for affordable housing, terming the project unsustainable.
And we propose that this provision, or rather this proposal, to be deleted in entirety, just in a view to ensure that the developers who are under the affordable housing program, together with the beneficiaries of the affordable housing program, are able to benefit from this cost reduction.
When those 1.6 million people get jobs, assuming 1 million houses are made, this is the last room being made. When it is finished today, tomorrow, what happens to those 1.6 million people? They'll be jobless and back to the drawing board again.
Media Owners Association of Kenya, Kenya Property Development Association, and the Coca-Cola Company oppose the introduction of the excise duty on imported raw materials, stating that the move will negatively impact local industries.
The government will then deduct a bit of that increase to go into the housing fund, and then the rest of the increase goes to the employees. So we see what would then happen in that case is that there would be a situation where government is actually getting this into the housing fund, but as far as the employees are concerned, they're actually their net take home.
We acknowledge that the timeliness of these proposals might not be ripe, because we know that some of these materials are key ingredients in construction, and cement clinker constitutes about 70% of the cement. So if you combine the two proposals, number one, you are reducing the importation, you are levying duty on importation of cement. That means you are already, of course, constraining the supply, and at the same time, you are introducing a levy on clinker, which is used for manufacturing cement locally.
And it has been seen where you have a predictable, stable tax environment, we are able to put in more investment capex, whether it's new production lines, to produce more. But what we've seen is where there's such instability, investment is now parked, and investors like us, we want to motivate investors.
The entities pleaded with the National Assembly to reject the bill, as the members of the committee reiterate a report that will be tabled before the floor of the National Assembly, where MPs will determine whether to make amendment to the bill or otherwise. Shedra Karera, Look Up TV.